we had a bombshell on Sunday, so to speak, when Alhaji Aliko Dangote came out to say that Dangote 20% of stake, in its refinery, and so that came out as a bombshell. And also, NNPC data confirmed that, but it was not a public knowledge until that. So I just want to hear your perspective. Let's start from there. Your perspective from on that and what that really means, to the Nigerian sector, and also what does it really mean, to the Nigerian sector, given the fact that a lot of people believed or assumed that Nigeria had some kind of significant stake in the refinery.
Well, I wasn't surprised because it was what I was actually expecting the board of Dangote Oil Refinery Company to do, given that in a share purchase agreement, for example, an investor or would-be investor needs to pay for his shares or for his equity. And SPA usually comes with very strict or stringent terms. So if, for example, NNPCL had used an SPV to raise $1 billion to front load as part of the equity contribution for its stake in the refinery, and then was supposed to provide an additional $1.7 billion worth of feedstock, which in my calculation in today's open market rates, is equivalent to around 20.7 million barrels of crude oil feedstock, and was unable to supply the refinery the 300,000 barrels per day until it paid up that 20.7 million barrels of crude oil. Then it's very natural and normal that the board of the company that signed an SPA with the state-owned enterprise will opt for reducing the shareholding to what it is it paid for in cash. So it's not a surprise. The only reason why it's generating so much dust is because it's a state-owned enterprise and Nigerians are co-owners in the Commonwealth, number one. And number two, this decision was made a few months ago, but there was no press release or statement from the state-owned enterprise briefing Nigerians that this is its position of things. It doesn't have feedstock to provide Dangote Oil Refinery Company because of X, Y, Z reasons, which I'm sure we're going to discuss in this conversation.
Yeah, but you touched on the point that they didn't make it open, and that's why it came as a shock to a lot of Nigerians, because the assumption was that where everybody was working on was that Nigeria has a significant stake in Dangote Refinery, and what that simply means is that they have a chair at the table, in terms of decision making, in terms of pricing, in terms of operation and things like that. And so my question would be, why did NNPC conceal that information to the public, given the whole situation around Dangote Refinery, until Aliko Dangote coming out to say this is the case, not what people presume? Why was it concealed? What was the objective behind that?
I'm not a part of the state-owned enterprise, so I wouldn't know why the management of the SOE would decide to conceal that information to the public. What is important is that the company did what is in its best interest, the world, and which is the same thing that any company in their shoes will do if they were faced with a situation like this. Like I've said it over and over again, that it is my view that NNPCL, following the Petroleum Industry Act of 2021, should transition from the way it's currently operating into being managed by an asset manager, and the federal government should have little or no interference with NNPCL. NNPCL's shares should be transferred to a beneficial owner, either Ministry of Finance Incorporated or Ministry of Petroleum Incorporated, and the asset manager should be the one warehousing the shares on behalf as a nominee holding company on behalf of the federal government of Nigeria, and making decisions on this. I honestly believe that if NNPCL were housed with an asset manager as a beneficial owner, this decision making will be a lot better, and we will not encounter a situation, for example, where a critical information like this is hidden from the Nigerian public.
Yes, exactly. And I think I agree with you on the fact that in terms of management, there seems to be a lot of concealment, on the part of NF. And that's what many people are talking about. Like, okay, you said you are raising, at least Nametic covered an article that says the 2022 financial statement that they were to raise, I think, about 1.3 billion for Dangote Refinery, and so I think that point is well noted. But another question would be now that, okay, it seems that Dangote Refinery, of course, is going to be listed on NGS, London Stock Exchange, and whatnot. It's completely and openly a privately owned enterprise, privately owned company. That means that in terms of pricing of commodity, in terms of decision making, of course, we have to put it in context of Dangote Refinery would be like the first, official refinery that's working in Nigeria. So every Nigeria seems to have like an interest in it. In terms of decision making, in terms of profit making and whatnot. Given the fact that Nigeria no longer has the supposed interest, does that mean that Dangote can make its own decisions, in terms of, okay, how much wants to sell the crude oil, how much the refined product and all, without any involvement of the government? Is that what this means now?
Well, it's a tricky situation for the board of DOC, and the reason why it's a tricky situation is because, number one, first of all, even if NNPCL had paid up their full equity contribution to get 20%, and they had a board seat, and they had votes on the board, and they are shareholders in the company, there is a limit to how much they can influence the decision-making process. It's a private company, so the federal government cannot dictate a private company how to run its business. However, DOC is considered as critical national infrastructure, a CNI. It's gotten a lot of waivers and incentives for the federal government during the process of its building this refinery. So there's a problem here. And the problem is that so far we've seen that only about 5 million barrels of crude oil has been supplied domestically to DOC, and it's imported more than 20 million barrels from the US, and it has a shipment, I think, coming from Petrobras, about 11 million barrels from South America, Brazil to Lagos. And the risk of importing mixed blends, crude oil with API degrees of below 30, which are heavier crudes, for example, Western Texas Intermediate WTI that is gotten in mostly Oklahoma and New Orleans and Texas in the US, and middle distillates that is gotten in Brazil. The risk of importing into Nigeria is, number one, even if the heavier crudes are a little bit cheaper than light crudes like Quaibo, Focados, Bonny Light, and the rest of them, it comes with freight cost. It comes with freight cost is cost insurance and freight CIF, and then it also comes with all the duties and stuff. So there is an added load. So that benefit of discount between heavy and light crude is not very much experienced. But then the stronger disincentive, disadvantage of that is if you import crudes with like API degrees below 30, you almost always have to look at an export strategy. Dangote, for me, speaking from a pure business perspective, not any bias or sentimental view, is going to make the most profit if he exports 100% of what he refines in Nigeria. But then again, he might not want to do that because he built that refinery with Nigerians in mind. And then the question again is that today, as we speak, because of the exchange, the landing cost of a liter of PMS is over 1,000 naira per liter. Where is he going to set his price? What is his production cost per liter of PMS? What is it going to be? And if he sets his price at the level that is above the government regulated price, for example, how is he going to collect subsidy from the government? So all these are commercial decisions that the board of DOC have to deal with. It's a sticky situation. It's not a situation that is very fun to be in, you know. Um, but you can see very well that the reason why PMS, which is actually lighter distillates or higher distillates, has not started production is because all of the centrifuges that controls the condensation distillation unit, CDU, has not kicked into effect. And this is because, considering the raging conversation about, oh, has it fully been licensed, and is it fully operational? And commercial refineries go through 7 stages of pre-commissioning, 7 stages. So usually the regulator, NMDPRA in this instance, has officials at the refinery for the first 12 months. And they stay with the refinery during wet production to test all the mechanical and electrical process, and to see that they're working very well. After 6 months, the first 180 days, they issue them what they call a provisional acceptance certificate pack, for an LTO. And then they watch. After 12 months, they issue them a final acceptance certificate, FAC, for license to operate. That FAC is a full LTO, license to operate. Now, it doesn't mean that they've not started production. They started production, but it means that certain parts of the refinery hasn't fully gone into operations or effect. So these are mechanics, because running a refinery is complex. These are mechanics, but the main sticky point here is the fact that Dangote has a source for its feedstock from outside Nigeria, which is not a very good story, considering that he had 7 or 8 years head start, and the government had 7 or 8 years to plan to supply him feedstock to ramp up to full capacity utilization. And if at all he had to import, he shouldn't be importing more than 25% to compensate for the ratio of transportation to non-transportation fuels, because crude oil feedstock that is lower than API of 30 usually produces transportation fuels of 40%. 60%, and non-transportation fuels of 40%. So your transportation fuels are things like your PMS, premium motor spirit, jet A1, automotive turbo and kerosene ATK, your um, um, what was it called? So your non-transportation fuels, for example, are things like your middle or heavy distillates, base oil for lubricants, your petroleum feedstock, your petroleum coke, your bitumen binders, and all of that. So it's very sad, for example, that he is not getting feedstock in Nigeria, and the reason he's not getting feedstock in Nigeria is because it's either the crude oil is being used for crude oil swaps, to provide PMS to Nigeria. You swap crude oil for PMS, or is used being pledged in for sale agreements for debts that NNPC took to finance all kinds of projects, from NLNG Train 7 to the crude oil backed loans, reserve-based lending that was done last year for Afrexim, to the one that it actually took in 2022 to finance the cash contribution it made to Dangote for the current 7.2% it owns, or it for that domestic crude oil supply obligations for allocations to refineries and at official rates, So these are all the complexities and
Well, the conversation, Mr. Kelvin, many people, or even that itself has alluded to it, is that it is not NNPC or NUPLC or the regulators that are not, supporting them. There are guidelines. I think NUPLC recently released a guideline, around, the supply of crude oil to local refinery, including Dangote Refinery. But it's the IOCs themselves who are refusing to sell, to them, and the IOCs, or no, not even all, and the IOCs are actually, inflating the price above the market price when it comes to supplying to.
I absolutely do not agree with that view, and I'll tell you why I don't agree with that view. 40%, if you look at the upstream structure of the oil and gas industry, so it's divided into three. You divide into deep offshore, mid-shore, and onshore. 40% of deep offshore is owned by the IOCs, in what is called cost oil. 60% is owned by NNPC, what is called royalty and tax oil. And then when you come to midshore, 55% is owned by the IOCs. And then you have 45% owned by NNPCL. Then onshore, most of the companies or IOCs have left onshore. In fact, the latest deal you saw was Chapal that bought over Total stake for their onshore assets for $860 million, I believe. You have quite a number of those deals. Mobile for Seplat, Shell for Renaissance. I think Mobile for Seplat is currently waiting for ministerial consent. And then you have Shell for Renaissance. So you have all these deals because the IOCs are leaving their onshore assets because of issues around community and vandalism and insecurity and all of that, and also the quality of the wells and the production volumes from those assets. They are going midshore and mostly offshore. So if you look at this and you consider the fact that when crude oil is drilled, because a lot of these international oil companies in starting projects deep offshore usually have what they call carry. Carry is where they front load the cost of the capex for building those rigs and drilling those wells deep offshore. And NNPC pretty much pays back through a process called amortization for the shelf life of the asset. So if for example, Mobil spends $5 billion to drill a well deep offshore, and NNPC is not able to contribute his own share of the capex to build it, they use what they call carrying oil and gas. And the share NNPC is supposed to pay in terms of capex, and then continuing OPEX is amortized over the shelf life of the asset, maybe 20 years or 25 years or 30 years. And then NNPC pays from the production. So when oil is drilled, 60% of royalty and cost tax oil is given to NNPC. They debit that that carry costs in what they call joint venture cash calls. So if, for example, the IOCs are meeting up with their share of domestic crude oil supply obligations under sections 109 of the PIA, and it's not conflicting with force major clauses for FSAs they have with buyers who they've already signed long-term agreements with, I see no reason why you should compel them to now sell crude oil further to a commercial refinery in Nigeria. And this is because we're very sentimental with these conversations, and we're not level-headed and clear-headed. We're speaking as Nigerians, not as business people. So historically, a lot of IOCs sell their crude oil through brokers. And most of those brokers are in Europe, okay? And the brokers charge a commission. If an IOC meets up with domestic crude oil supply obligations, they don't have any obligation to provide a right of first refusal to Dangote for the crude oil feedstock they are supplying to either third-party buyers or they are sending to their own refinery. Shell has a refinery in Europe. Total has a refinery. Mobil has a refinery. So if they're not selling to third-party buyers, they are also selling to their refineries. So if they meet up with the DCSO, they don't have an obligation to provide a right of first refusal on the crude oil feedstock. The question should be directed to NNPC because NNPC gets tax and royalty oil under that arrangement.
Yeah, but the NUPLC guideline, and I think I followed this conversation for quite a while because there was a debate back and forth and whatnot. Is that the IOCs that operate in Nigeria they must be mandated, even as speculated by the PIA, they are mandated to first and foremost sell to local refineries.
No, that's not.
That the guideline is
That's
that they
not. That's
must.
not what the DCSO says. That's not what
They are no, they're obligated to provide for exporting to their.
Can you hear me?
Did you get what I said, sir? I said that the guidelines mandate, even the PIA said that they are obligated to provide or make available crude to local refineries before exporting or selling to the foreign traders.
So the DCSO actually says where due to operational or other reasons, the production level in each month falls below allocated quota for such month, the lessee or the IOC shall ensure that the domestic crude oil supply obligations for that month takes precedence over exports. The question you should ask is the production level equal to the allocated quota for such months? The DCSO that was released in the Gazette by NUPRC does not say that they are mandated to first provide commercial refiners in Nigeria with crude oil feedstock before they export. It doesn't say that. It only says that the production level has to meet up with the allocated quota. If it meets up with the allocated quota, which is what I said, that if the IOC fulfills the obligation of the DCSO as stated by NUPRC, they are not obligated to further provide the right of first refusal to a domestic refiner. It's always important to situate this conversation because there's a lot of angst and a lot of vitriol currently against the IOCs. In fact, I hear rumors that National Assembly has already started asking for documentation to probe the IOCs from all the machinations of government. And this is coming at a point when the government is cutting the IOCs to open FID for new projects. I will suggest to the government, to tread this very thin line of caution, to ensure that it manages this situation very carefully so that it doesn't push investors away. And this is also because, a few months ago, the chairman of Total Energies was speaking at the conference in Kigali and mentioned that the reason why they diverted $6 billion of investments to Angola, who left OPEC in December 2023, over Nigeria, who is the largest producer in Africa, is because there's policy inconsistency in Nigeria. So if you've provided a guideline and the IOC is meeting up with the guideline, you can't compel them to further give the right of first refusal to a Nigerian refiner. It's not done.
Yeah, I think I will agree with you that there have to be certain incentives, for investors, particularly in a time where Nigeria, need, some kind of capital and, inflow into the country. And we have the advantage of, the oil and gas, we are a top oil producing nation. I think my last question, because we run out of time and, we keep this on and on, would be that you have Nigeria, allegedly subsidizing petrol, given the fact that crude oil prices have gone up. But there's a conversation around landing costs being around 1,000, 1,000 or 1,002, whatever price they put. But we know that with that the price of PMS right now does not reflect the reality of the market. I also have the conversation around Dangote Refinery saying that it's coming on board, probably August, September, whatever, before the end of 2024. How are we going to reconcile that? Because you've said here now that Dangote, of course, is running a business. As a matter of fact, you made it clear that it will be more profitable for him to export, its goods outside of the country. How can we reconcile the fact that there is still subsidy on petrol and Dangote Refinery, which is a privately owned refinery, who want to run in, who does not want to run in loss? How is that going
The
to,
government will
how are
provide
they
him,
going to be just
the
opposed?
government will provide him feedstock to justify why he should make the sacrifice of supplying the Nigerian market over exporting to make maximum value for his shareholders.
But the issue is that they're not even providing it. They are not providing the feedstock.
That's the problem. That's the problem. So if you can't provide him feedstock, then the government has to do what it must do to ensure that it provides enough liquidity in the FX market to provide for balance of payments that the central bank has, so that the exchange rate doesn't continue to drop. Those are the two trade-offs: crude oil price and the FX rate. So if you can't supply in crude oil, you can't control crude oil price, then you have to ensure that the macroeconomic fiscals are in place and there's liquidity in the FX market to ensure we don't slide to 2,000 naira to $1, and that subsidy bill doesn't continue to widen, and the landing cost of PMS doesn't continue to rise. So these are the trade-offs the government has to make, but it has to understand that whichever way it looks at it, currently, if Aliko decides to supply Nigeria with PMS and other transportation fuels, it will be at a discount, and it will be because he wants to be patriotic, not because he's obligated to do so. I don't think there's any provision under the PIA that obligates him to supply a share of what he refines to the Nigerian market, because that will come at a discount to what he will get if he exports in US dollars. But of course, he's a Nigerian, and I'm sure one of the reasons why he was inspired to build this refinery was because in 2007 he attempted to acquire Kaduna Refinery through a consortium called Blue Star, and it was rejected by the late President Umaru Musa Yar'Adua, God bless his soul. And he started a refinery because the government basically failed in meeting up with its responsibility of providing functioning commercial refineries to backwardly integrate petroleum products in Nigeria. So he should be encouraged.
I agree with you. It should be encouraged. And thank you so much, Mr. Kelvin. This is an ongoing conversation. It cannot be exhausted. But I just wish like the whole thing could be more simplified, could be, direct to the point. But as many issues in Nigeria, it's not usually the case. Thank you so much, Mr. Kelvin, for your time. I really appreciate it.
Thanks for having me.